So once again, the SEC is seeking to hide the Bill Hinman emails. They're seeking to delay things. And yet once again, Judge Netburn seems to have sided with the SEC on this one. In this video, I'm going to talk about what the SEC just requested. That's pretty much ridiculous. What Ripple responded with, and what some people said it looks like Ripple came out swinging, and what Judge Netburn finally decided. Because in this case, it looks like it's coming down to the availability of the Bill Hinman email. So I'm going to tell you what this does to the timeframes. I'm going to tell you what this does for the timeframes, if anything. Also, the Federal Reserve just had their FOMC meeting today and announced that there's going to be a rate hike. So I'm going to talk about what some of the experts and analysts are saying, what these hikes are going to do to the markets, what they've already done, if anything, and specifically, I'm going to talk about why some experts are saying, well, this could flip Bitcoin and the crypto market from going red to actually going green. So I'm going to talk about some of the price movements that Bitcoin and some of the altcoins have been doing recently, and why it might actually be a positive for some of these numbers that are coming out. Hey everyone, my name is Randy. Welcome back to the Late Night Grind. Right now on this channel, we are covering the Ripple versus the SEC case, as well as other cryptocurrency news, investment markets, and personal finance. So if any or all these topics interest you, make sure you hit that subscribe button and join the Late Night Grind community. Also, if you do three things, I'd appreciate it. Smash the thumbs up button, watch this video to the end, and check out my Patreon link in the description below. If you do that, I greatly appreciate it. All right, guys, let's jump into it. So first, the FOMC announced what they are doing with rate hikes in the United States this morning. They announced that they will be adding an additional 50 basis points. In other words, a 0.5% to the interest rate. It'll make it a total of 1%. Now, those are some very small climbs, but the Fed feels like they're essentially trapped. If they do too much, they could hurt the economy. And if they don't do anything, they could hurt inflation even more. So they're absolutely trapped between a rock and a hard place. And some of the analysis and big people in the finance world, for instance, Jamie Dimon, the CEO of JP Morgan, said something like this is probably too little, too late, but nonetheless, it's happening. So what is it actually doing to the markets? Well, during when Jerome Powell was actually giving his speech, everybody's eyes were on the markets, and they really did nothing. Comparatively to what they used to do, what used to happen when the Fed would announce either rate hikes or some moves that was seen as drastic at the time, it would absolutely move the markets. But since things like this have been discussed and talked about ad nauseum, many analysts are feeling like the markets already have these priced in, not just this rate hike, but rate hikes for the rest of the year. They're already priced in, or they'll be dynamically priced in as the rest of the year goes on. So some of the analysis specifically talking about the cryptocurrency world and Bitcoin, because Bitcoin sometimes is seen as the antithesis of what the rest of the markets are doing, except that it's been correlated to the NASDAQ since COVID hit. Well, some are saying because Bitcoin looks like it's nearing the end of its consolidation, nearing the local bottom, this news could actually be flipping Bitcoin green. And as of right now, when I'm making this recording, well, its price did jump a little bit into the green. So the next thing that we are going to keep an eye on is May 11th, and that is when the CPI numbers are going to come out. Now, obviously, last month they came out, it was 8.5%, the largest number in 40 years. So we're going to see if that number stays the same or if it actually drew back a little bit. Because if it's any higher, well, let's just say it's not going to be good for the rest of the markets, considering that the United States GDP actually dropped by 1.5% in the first quarter. And going along with some of the market speculation from what these rate hikes are doing or could be doing, Danielle DiMartino, who is the CEO and chief strategist of Quill Intelligence, she actually went on the record and saying, pointing to some of these tech stocks that have tanked in the past couple of months, she basically, what she called it was the bubble effect caused by the Federal Reserve's stimulus. Well, I think that could be part of it. However, I don't think that's the whole story. I think part of that is the fact that a lot of these tech companies like Netflix, Zoom, Meta, a lot of them that had a big boom during COVID were because of all the lockdowns, people staying at home a lot longer, a lot more frequently using these technologies, and thus making the value of the stock worth even more, the earnings of those companies worth even more. And now when those lockdowns aren't happening, summer is coming, at least in the United States, the usage of those just isn't as high, and so the earnings aren't as good, and therefore the stock value plummets. So I think it's that, along with some of the inflationary effect that all that stimulus had caused, but obviously both of those things combined did form somewhat of a bubble effect, at least in the tech sector. Okay, so now let's move into the Ripple versus the SEC case, because there were some motions filed recently from the SEC side, which of course it revolves around one thing, and that is keeping the Bill Hinman emails hidden as long as humanly possible. So they actually wrote a motion to the judge. Okay, so what do these motions concern? Well, the SEC actually wrote a motion to the judge asking if it could write a reply, actually have an extension of time, of course, to write a reply to Ripple's reply about the SEC's latest assertion that these Hinman emails should be considered attorney-client privilege and therefore should be hidden, and they don't have to turn over the documents. After the SEC made a big to-do about this attorney-client privilege, which I covered in my previous video, Ripple asked for an extension of time to respond. Well, they didn't take very long. They actually came back yesterday and wrote that reply, in which they basically just laid out why the SEC's assertions are ridiculous. So basically what Ripple did was call all of the oral arguments, all of the motions of reconsideration, all of the court's decisions, the reconsiderations, all the briefings, everything that was revolving around these Bill Hinman emails and the deliberative process privilege was basically just an exercise, because the attorney-client privilege basically trumps anything, even though they never brought it up until now. So as James Filan on Twitter said, it looks like Matt Solomon, who is Ripple's counsel, who is writing this reply, came out swinging. Well, it doesn't look like he came out swinging hard enough, because this then went back to the SEC, and the SEC asked for an extension of time to essentially reply to Ripple's opposition. Judge Netburn granted them that time. So they have until May 22nd to reply to Ripple's reply regarding this new client-attorney privilege assertion. I'm telling you, you can't make this stuff up. The SEC knows this is a game of delay, delay, delay. Supposedly, this is not going to delay the case overall, as some of these time frames in terms of getting these motions for summary judgment submitted, and that deadline being November 15th. Supposedly, it's not going to affect those dates, but right now, we just see delays. But nonetheless, this is all about Bill Hinman's emails, not even about delaying the case anymore, because as we know, every time these emails are supposed to be brought forth, the SEC does everything in their power to have that not happen. Now, Fred Rispoli, who is actually suing William Hinman and Jay Clayton at one point, since dropped that lawsuit, he's actually said, well, the SEC actually has a right to claim client-attorney privilege. However, he does not think it will win and thinks the judge will rule against that eventually. And so I just looked at my notes. Actually, it's May 18th that the SEC has that date to reply to Ripple's reply regarding the SEC's new privilege assertion, new client-attorney privilege assertion. So we're definitely going to keep an eye on that, because it's going to be really interesting when those things are submitted, and I hope that Ripple's attorneys get even more creative and even more aggressive when responding. Even though the judge granted the SEC this time frame to put together their argument, I just can't see that happening with a new one. Somebody suggested, or somebody on Twitter asked, why is Judge Netburn continuing to cave to the SEC's requests for extension? Well, one of those reasons could be the fact that if she grants these extensions to the SEC to put together their replies, that once she denies it or rejects it, well, they won't have the opportunity to appeal, because those motions for extensions of time to put this all together were actually granted. I'm sure that the fact that Ripple responded in a day and then the judge responded within a day shows that both the judge and Ripple want to move this case along, and obviously the SEC does not. All right, so if you want to follow along with any of these stories that I cover, make sure you subscribe to the Late Night Grind community. Just hit that subscribe button down below. Also, if you want to follow me on Twitter, the link is in the description below. You can always have a conversation with me there. All right, guys, thank you so much for watching all the way to the end, for smashing that thumbs up button, and as always, I'll see you guys on the next video.